The AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me for episode 119, Mr. AJ Brown. Good morning, AJ. How are you
Hey,
doing
Sip.
this frosty February 9th?
I mean, it's good. It's good. Things are good. I mean, it was a very quiet week. So it gave me a lot of time to kind of contemplate my upcoming option trading plans.
And with the calmness, I continue to see on the headlines all-time highs. I mean,
Yeah.
we were talking 4,800 for quite some time, and 5,000 is that accurate?
Yeah, it's accurate, but it was interesting. It only started to breach that 5,000 mark today. It's been really bumping up against that level. And the Fed has been trying its hardest with its rhetoric to put the brakes on. They keep saying we're not going to lower rates till we really see that these inflation cutting tactics have kicked in. But investors are just so optimistic. It's quite interesting to see, the pile-on of what's going on. People just do not want to miss out on any of this upward movement.
And so we can get straight into what you would be doing as a portfolio manager, as an investor, right? Because if we're not going to head back down and the buyers are going to continue to come in day after day, I mean, how long can we continue to trek upward? Because it seems like 20 points here, 10 points here, and and it's 200 points over a month, and it's like we're not getting the pullbacks that you like to see in order to take like a long position.
Yeah. No, it's actually alarming, and it's starting to alarm a lot of at least some of my peers that are still in the like fund world. Because it's exactly like that. It's not sustainable at all. Let's go over some of the pieces of the puzzle here. So yes, prices keep coming in. We did get one report this week that said that savings is at an all-time low, and that debt is starting to accumulate. So that's not very sustainable, as we know, right? We also got a report this week about the US. It's called the debt to GDP ratio. And, historically, having a debt is not a bad thing because, just like how credit card companies, in order for you to build a good credit score, being able to manage debt is okay. But when your debt is greater than your annual income, that starts to be a problem. So, for instance, the US came in at 120%. Historically, that sweet spot was about 70 to 80%, right? And so the fact that our debt is 120% of our GDP here at the US, that's not considered sustainable. It's like the can is being kicked down the road for future generations. You've probably heard that a bunch of times. But when you compare it, look at Italy, right? Italy, with their aging population, their debt to GDP ratio is 170%. Japan for the longest time had GDP ratios almost near 200% of GDP. So, is that a measurement? I don't know, but just, historically, and, when you do the math, how can you continue to have this much debt and not have that big of an economy? So that's another data point. Another data point is just, you know, sadly, the hedge fund managers out there still refer to retail money as dumb money, right? Not as much as they had, right? I think they got a good shaking out when it came to the GameStop and the AMC theaters. run up by just run of the mill retail investors kind of getting together on things like Reddit and YouTube and other socials. But still, we're seeing a lot of retail money jumping into the market as if they're afraid that they're going to miss out on something. And, hedge fund traders, besides being a little bit alarmed, they are looking for strategies on how to get that retail money into their coffers because that's what the markets are. Despite what a lot of folks out there interpret from, especially the talking heads that'll go on a TV show or on a radio show and start, yelling about how much money was created or destroyed in the markets. All the markets are places where money changes hands. And traditionally, these, uh, these fund managers have been able to figure out how to get the money from, you know, beginner and novice retail investors that gets peppered into the market into their coffers, right? And so there's that, right? There's an inordinate amount of retail money going into the markets right now, dumb money, right? And finally, we've got this pattern coming on here where indeed we're at the tip of our pivot. And you and I drew this pattern about 2 or 3 weeks ago, and we extrapolated out this pivot point to Monday. And so, next week, I'm expecting something to happen. I don't know if the dam will break, SIP, or what, but I'm expecting something to happen in the form of some sort of breakout up or breakout down. And if you look at my chart, this level of resistance has held pretty well. It's the level of support that keeps getting tested, right? It got tested back in the beginning of January, and then a little bit later, around January 17th, it got tested on January 31st. In fact, it got tested this past Monday. And so I'm almost certain that we might be starting to get ready to finally see this overbought market correct itself. We'll see.
I have a quick follow up to that, and that is the types of companies and or names that are leading this charge.
Mhm.
Is it safe to assume that some of these bigger names like a Google and an Apple and a Meta are a primary driving force for this continued upward movement, and the smaller names are chugging along, and maybe that could be something that breaks? I mean, are you seeing that in any of can we assume that, given there's such a large portion of the S&P, for example?
Yeah, it's funny you say that because one of the things that my program participants and I'm going to go ahead and pull up. Let's see if I can pull it up. I got my marker on. Let's go ahead and pull up our user portal. So now this is the portal, SIP. People can get free access to this portal, and they can even get free access to this tool I'm about to show. I'm going to show you what it looks like because the portal is different if you decide to buy some of our education, get involved in some of our programs. So, if you have free access, you'll see something when you log in. If you're a program participant, you'll see a little bit more. You get more access, if I guess you can say. And so I'm going to just go ahead and click on my portal because I want to show everybody an interesting tool, and that's called our Index Stats tool. And that should be available, if I remember correctly, to even our free access folks. And in addition to keeping track of the big three, the industrials, the tech stocks, and the S&P 500 index, which I feel like, most represents the watch list that I'm trading, we like to look at the secondary indexes. So the secondary indexes tend to consist of the S&P 100. This is the 100 best stocks out there. And this is a good representation of those companies you were just mentioning, the large caps, right? And then there's the mid caps shown by the S&P 400. And then we have two different perspectives on the small caps, the S&P 600 and the Russell 2000. And so indeed, what we've been seeing is that it's been the large caps pushing us higher. And we saw some really good push-ups this past week, especially in Nvidia. I mean, Nvidia seems to not be able to find a high, and Microsoft. Those are two of those artificial intelligence plays. And then things like Alphabet, which is Google, and Meta, and those guys, they're all pushing higher. Apple released their virtual reality things that we talked about last week, and that seems to really be gaining some momentum, more momentum than anybody expected. So tech and some of the areas that the market can really excel on have been buoying us higher. The question is will it wind up like 3D TV, right? Will it be something that loses its luster when reality hits and people start getting headaches when they try to watch the programs? I don't know, but I just know that, a lot of this overbought, and I hate to be, I keep ringing the bell about don't trust leading indicators because things can stay overbought for a long time. But even I'm on the place where we haven't seen the pullbacks that we need to sustain the ups and downs in the market. It just seems like it's time to have some sort of correction.
And one last follow up before we continue on with the show, and that's taking the concept of using options in this
Mhm.
type of market, right? Since it is slow, I mean, slow week, slow day, grinding up, not getting the volatility and the pullbacks that we want. Covered call writing is a good approach to that because time becomes our benefactor and we're just letting it come in like a paycheck, right?
Mhm. Yeah, no, covered call writing is fantastic. I want to throw out there that here at Trading Trainer, we do something called protected covered call writing. So at the same time that we sell our covered call premium, we like to buy an out of the money protective put. I think those out of the money protective puts, and also we like to do covered put writing. I think those strategies are what's going to be just so crucial versus normal covered call writers, so crucial for success in the next couple of weeks.
You're saying protected. All right. So we're enhancing some of our definitions. And
Mhm.
at the same time, I'm learning. I'm not the most savvy of options traders, just like some of our viewers might be in a similar position. But AJ and the team at Trading Trainer have put together an amazing workshop where he breaks down 4 of these strategies. He goes over the basics, the mediums and the difficulties of utilizing options and covered call writing and just writing of options for your portfolio to help you weather these types of environments of slowness and creeping up, because it is interesting that we have some data that's troubling in the sense that credit card debt at a high, savings at a low, that's not a red flag, so at some point that may catch up to the market and we're going to want to be able to protect ourselves, and utilizing options is great. So if you're interested in learning more, we do have a daily workshop. I threw the link to that in the chat. Head on over there, sign up, watch it today, watch it this weekend. It's playing every day. Otherwise, we do have a good number of people on the stream today. So anybody that's watching that you want AJ to run through a name, feel free to drop it in the chat and we'll do some analysis. Otherwise, we're going to take a quick break. We've got AJ's pick of the week. We've got our speed round, and we've got plenty of time to give you guys some specific answers. So feel free to just throw it in the chat. Otherwise, we're going to take a short break, and we'll be back in a couple seconds.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So before we go into any of the detailed options analysis and some trades. Before the show, I was asking you if you caught yesterday's big international interview with Tucker Carlson and Vladimir Putin.
Wow.
And I just happened to be at the gym when I saw it came up, and I started listening. I started watching it. It's a 2-hour interview, very, very interesting. And some of these headlines I'm seeing, talk show or serious conversation. And I felt like it was a serious 2-hour conversation. And one of the points that he brought up, I'd love to get your opinion on, AJ, is the US dollar. And so the question, Tucker asked Putin about the US dollar, and he was like, well, look, we got sanctioned, right? Everyone sanctioned Russia. And so we had to stop relying on the US dollar and started trading in yuan and this and that. And we've survived. So we don't have to rely on the dollar anymore. And then he was like, ultimately, at the same time, everybody else who's trading commodities is choosing not to use the dollar as well. And so America, you guys are making your own dollar less valuable by your own actions. And so, AJ, I'd be curious to know your thoughts on that perspective, but also just the dollar in general and what effect it might have on us as citizens and just as participants of the market.
Well, I think that this is more of a long-term discussion because when you look out there at the various currencies, they all have a problem. Even the cryptos have problems associated with them. And it's turns out that the dollar, even with all of its flaws, still seems to be reigning strong. But with that said, we have seen many countries decide to divest themselves of the dollar. Not so much in their, all of these countries do like to buy dollars whenever they have a profitable economy. So we still see a lot of people investing in the debt here in the United States because, it seems like it's super solid debt. And so, you're still not seeing people run from that. We did see a pretty large China sell off. China at one point was the biggest debt holder. I think they surpassed Japan about a decade ago as being the biggest debt holder. And now Japan is back being the biggest debt holder. China got rid of some of their government bonds, but lately, China has been back on the buying market. And so, I hear these comments from Putin, and you do see some evidence of some countries who have said we're going to stop using the dollar. But then you see other countries like Argentina with their new government saying that they're going to pin their transactions to the dollar. So, with what's been building up and what I've been describing in the beginning of the show, it does make sense that we should be on edge because we're not in a very good place that is sustainable for the long term. But right now, nobody is better. And that's kind of if you've got a choice, you take the least bad choice, and that happens to be the US dollar right now. So I'm not concerned, like, for instance, definitely not in the short term, probably not in the next 5 to 10 years, maybe not in, my foreseeable lifetime. But I think, moving ahead 30, 50 years from now, I think the US has to figure some stuff out because there's some other economies coming online that once they solve some of their problems, they'll be, way ahead of what the US has been up to.
Yeah, my thoughts during watching the interview were, I wonder if our president could sit down for 2 hours and answer these types of questions and have these types of discussions, and or our former president. And that's where I grow a little concerned in that these are the people that are supposed to be leading us, and our dollar is being laughed at in the world order. And who's coming to our defense? I guess that's what the 2024 election is all about. but we're not politicians.
Or
We're
maybe the 2028 election, because it looks like the 2024 election is going to be, kind of two different, depending on how you look at it, two different folks that the question is who do you want less, right? Versus who do you want more?
It's unfortunate unless we get some sort of dramatic news affairs, which is very possible because the Supreme Court is like out there questioning viability, and yeah, we'll see.
I know the least about politics. I just want everybody to have a fair take at being able to be an investor as well as being an employee and a business owner. But man, it sure does look like I could be watching it on daytime TV with the other soap operas.
Without a doubt. And I think yesterday's interview with our quote unquote enemy
Nemesis, yeah.
nemesis was very interesting, and it asked, it bodes to ask a lot of questions of us US citizens and
Where
as to
is
what we're doing.
where is Tucker Carlson these days? I know that he's not on Fox News anymore. Is he
X,
just
X.
doing it? Oh, so he's just kind of doing his own thing and publishing broadcasts over X.
Well, because Elon Musk was like, "Hey, I won't shut you down. You can say and do whatever you want on my platform."
There you go.
And so he tweeted, Elon Musk retweeted it as soon as it was posted. And I mean, what is that? 100 million people just like this.
Yeah. Yeah. Okay.
But I was surprised by myself that I could sit through the whole 2 hours because
Was it that riveting? Because I didn't even pick up on it.
it wasn't that it was more so that it didn't seem fraud, right? It
Mm.
like we always look at Russia as like manipulators and this and that. And he honestly, or I don't know if he was honest, but he answered the questions that were asked of him. And one part, certain parts were very interesting, where he was like, "Oh, I talked to Bush. I talked. Me and Bill Clinton talked about this." And Tucker Carlson would be like, "Well, what did they say?" And he'd be like, "Well, I'm not in a position to say what Bill Clinton or George Bush or Biden said. Go ask your president what they said when I asked them this." And I was like, that's a fairly diplomatic way to like have an interview, because I could imagine Donald Trump's response to something like that. But it was, I mean, he definitely put it all out there. So if anybody wants to go watch it, it is on X, and it's not bad. I mean, I would definitely be one to say that I didn't enjoy it, but I was thoroughly interested. Although there was like a good 30 minutes where he goes back to like the Russian history of like the 900s, the 1000s, the 1300s, and it's just like that's what you're basing your territory on. But I guess you have the history books, we don't. So who are we to say that you can't go back that far? So very
Mm.
interesting.
I
Um,
think my only take on all of this, because I've done a little bit of studying on, for instance, the Roman Empire and then the British Empire, and before that, the Ottoman Empire and things like that. I think technology is an accelerator. And so these life cycles, like the Roman Empire was what, 1200 years, and then the British Empire maybe 200, 300 years. And really the United States is kind of the empire of the present. And the scoop is it's been since World War II, right? It's been about what? About maybe 60, 70 years. And it looks like, just everything is sped up. And so you better be on your ball. You better not be slow. And I think all this squabbling and not being able to make decisions as a unified group is going to, technology is going to keep things going faster and faster. Empires are going to rise and fall at a much greater rate.
yeah, especially at the rate that we're spending money on things
Mhm.
that don't even benefit our own borders.
Mm.
Anyways, with that being said, AJ, the world wants to know, in this unsettling place, how can we make some money? How can we put on some positions that are going to make us feel good at night? So let's dig into your pick of the week. And your pick of the week this week is Gilead
Biotech.
Sciences, ticker symbol GILD. Is that
Mhm.
because it's boring, or is that because you're seeing a nice little swing play here?
Mm-mm. It's not a swing play per se. It's a return to being boring. You can see that I've just based on my drawings and my annotations on this chart, that I've been watching Gilead for a while. I've actually been watching Gilead for, coming up on 15 years that I've been trading Gilead on and off. And you can see that Gilead at this point is no longer cutting edge per se, but more of one of these boring stocks. I'm going to switch my indicator over here. This is the indicator that I use typically in order to look at the broad market. So when I want to take a look at indicators for perhaps trading signals, I'll switch my indicator to maybe, let me turn this one off. And I just want to give people, I know a lot of you have downloaded our free indicator. If you haven't yet, we're right now in the process of getting it put onto other trading strategies. Not trading strategies, trading platforms. I believe that we're queued up with Metastock and NinjaTrader to be releasing our indicators soon. So you may want to just get in the queue, sign up for a free account, and then check back often for when those different platforms come live. But the one that I'm interested in looking at is called the Fast MACD. Gerald Appel was the original guy who mathematically came up with the MACD, and now his son has taken over the company, and Marvin keeps coming up with cool variations. And one of the coolest variations over the last decade has been this Fast MACD. So, and I've put my own spin on it, Sip. The MACD traditionally is calculated on closing prices. And with my indicator, you have a choice of what price your MACD gets calculated on. And I've been having people come to this thing called VWAP, volume weighted average price. And it's been doing me well. It's been giving me signals that are either, when there's volume involved, volume validation, the signal comes faster than if I was just using close price. And when there's a lack of volume, meaning that maybe there's not a consensus in the markets, it actually has been holding off on giving me the signals, meaning it won't give me, it has less propensity to give me a false signal. So I'm urging a lot of my folks to try using VWAP on some of your trading signals instead of close. And then the traditional MACD settings are 6, 19, and 3, making sure that they're all set at exponential moving averages. And I have this 1-bar reversal filter. In the case of trading signals, turn that sucker off, right? You want it to be set to no. So if you set that up, you can get some pretty good signals for legging into premium trades of all sorts, not just covered calls, covered puts, and the bull call diagonal debit spreads and bear put diagonal debit spreads that I'm always talking about. I'm talking about these could be good signals for iron condors, for any kind of vertical spread trading you're doing. Yeah. So here you can see, now that I've adjusted my indicators, that we've gotten a couple fake out signals. We did have a drop, it's this drop SIP that happened about a week and a half ago. It's this drop that got me reinterested in Gilead, because it was a return to normalcy for Gilead. Gilead spent a month kind of trading outside of its channel, and then a one-day drop brought it back. I'm looking for an opportunity for a bottom here. I'm waiting for a good bottom signal. In my case, that would be this light blue signal. And I use my signals end of day. So I'm not looking at the markets throughout the day. Instead, I'm just checking in the evening, usually after my toddler's gone to bed, because I like to, play with her all evening and then tuck her in and read her a story. Once she's asleep, I'll come to my office, I'll turn on the trading computer, and I'll look at Gilead and look for that signal. And if I don't get it, great, I'm done for the evening. But when I do get it, I'm then going to see if I can trade it the next day. And I usually set up my automatic trader to do that, right? And so I'm waiting for that bottom signal. And if I get that bottom signal, I'm going to either buy some of the Gilead stock. It's kind of expensive, but the other option, the other choice you could make is, instead of buying Gilead the stock, you could use a back month deep in the money option substitute. So I'm thinking probably this January 2025. That gives us plenty of time before it expires. So the January 2025, that's called a leap. All of those options that expire in subsequent years on the third Friday of January are called leaps. And I want to go pretty much deep enough in the money. I'm probably thinking about this $50 strike price. So instead of spending $73.50 a share, I'm going to be spending more like $24 a share. And so I buy that particular call, or I could buy the stock, either one of them, when I see that bottom signal. And now I'm set for any trade that's going to go up. So I could leave it at that. If Gilead continues to do like it did last time and go above, say, 83 bucks, then I'll just look for an exit, and that'll be a directional trade. All well and good. That's called a trend following trade, or a trend reversal trade. If Gilead decides to do as it has in the past, SIP, and decides to give me just a little bit of appreciation, but then pull back around the $80 to $82 range, that's when not only do I sell my covered call, but I also buy that protective put. So the call that I would sell, SIP, would be something that would be at the money near term. So we're going to have February options expiring not this Friday, not today, but next Friday. So by the time I get up there, I'm probably thinking about my March options. And if I'm somebody who does weeklies, I would probably just make sure I go about 3 to 5 weeks out with my weekly option, sell that option. But then at the same time, and this is the key, this kind of differentiates the trading trainer way of trading from others. At the same time, I'm going to go about 6 months out and buy some protective puts somewhere around the $74, $75 strike price, right? And those will protect me against, pullbacks. So that little combination. So I've got, that was a lot of word salad just to say I've got a lot of choices, but step one is, as soon as I detect this reversal around $74, I'm going to look to get into this trade somehow.
Given the length of time that you've traded this, is this pretty normal volatility for Gilead? Because it seems pretty, at least recently, that's like a 12, maybe $15 spread on the prices.
Yeah, this little move up. So when I was trading Gilead this past time, I was indeed, long Gilead. And when it went past $83, I stopped writing my premium as soon as I hit that threshold. And that threshold is roughly about 40%. So I just let, it's so nice that we have all these drawing tools. This is Thinkorswim that I'm demonstrating, but all of them have this drawing tool where you can draw your channel, and then the drawing tool will automatically put, and you can't see the bottom one, but if I squeeze it down, you'll see that my drawing tool automatically puts lines 40% outside of the channel in both directions. And so I use that as a threshold. If I start trading above that 40% line, it's time for me, instead of selling premium, to go ahead and ride this as a trend following or a trend reversal type trade. So just look for my exit and take all my profit and run. So I did that, and I'm glad I did that, because something happened. And, as soon as I do that, I kind of stop looking at the stock when I'm out of the position. And this might be an aha moment for some of you traders out there. Once you're out of the trade, you don't have to look at the ticker until you get an end of day signal again, right? Because a lot of people will continue to watch the symbol even though they're no longer in the position. And then they'll start to get, like, if the symbol accrues further profits, They'll get upset around stuff that they never even had, about gains they never had. You can, a lot of what goes on as an investor and a trader in the markets is a mind game. And you have to be able to have a disciplined mind to be able to play this. So one of the ways I have is when I'm out of the trade, I'm done watching it. So it wasn't until I saw the news headlines saying Gilead had dropped that I came back in and I started watching Gilead. And now that it's down near my initial level of support, it's piqued my interest.
Yeah, that's that FOMO component where, hey, you made some money. You didn't make all the money, but you should be happy you made some money, and just wait for another opportunity because there's plenty of them. And we're going to dig into a few others that our viewers and our members have thrown out throughout the week, and we thought it's worth digging into to see if there's some options play. So heading into our speed round, let's go ahead and start on the East Coast. This is Carol from Hartford, Connecticut, interested in a natural gas ETF, ticker symbol UNG. We did touch a little bit about commodities. How often do you play the ETF, the commodity ETFs, AJ? I'm curious.
Well, ETFs in general, so exchange traded funds, there's pros and cons. The pro is that a lot of folks like ETFs because it's automatic diversification. An exchange traded fund, by definition, is a basket of securities. It's not a mutual fund, because a mutual fund has a human, or I actually heard that some of the mutual funds are now incorporating some artificial intelligence to help them make decisions. But it's got a manager who's constantly taking this chunk of money called the fund and deciding what to buy and sell, right? Whereas the ETF is set, right? It's like the natural gas ETF is going to invest in the commodity of natural gas and maybe a couple of other natural gas plays. The transportation sector is going to be, weighted this much of FedEx, this much of UPS, this much of DHL, right? And so what happens is you have to start making your investment decisions on more macro broad market news versus on the news of the individual company. And it's a little bit more difficult, in my opinion, to analyze and make, educated guesses on what the markets are going to do or what the sectors are going to do versus an individual company. There's still a merit to some fundamentals analysis in your overall basket of tools. When we create our watch list, when we decide that a candidate should be moved from our watch list to a hot list, we do a soft data analysis, which is basically a fundamentals review, right? And so that's one of the drawbacks to ETFs in general. So, but the benefit is there's just a crap ton of liquidity because there's just so much popularity around them. So if you're looking for something liquid and diversified, that's a way to do it. Do I get involved in the natural gas or any of the commodity ETFs? The natural gas one I have. It's actually on my program participants' watch list. And the reason why I like natural gas is because it has been absolutely boring for decades, right? It is something boring, which means boring is good for us premium sellers. So I'm glad that you picked up on this one, Carol. There seems to be a second bottom forming around this $17 to $18 mark. And we did get a signal. I've actually been looking at the natural gas one, so I'm glad you brought it up. We did get this signal back on February 2nd, only to have it reverse on us before we got a chance to trade it, right? Because these are end of day signals. I'm going to keep harping on it that I'm an end of day trader, an end of day signal. And when we tried to trade it in the subsequent days, we didn't get the follow through that we needed in order to open a position. And then on that second day, you can see right here, the signal reversed itself. So, Carol, I would look for a bottom signal that includes follow through, and I would be very disciplined to make sure that I would wait for that signal end of day and then make sure that the follow through comes in those subsequent days. But a purchase of natural gas right now, you'd be getting it at bargain basement prices, and I think that's a good thing because, despite the fact that natural gas is dropping, it's one of the most used commodities around the world, right? And so I think that it's not going anywhere. And so if it artificially drops in price, that's a great time to be buying some natural gas and then selling premium on it. It does look like we've got somewhere around the $25 zone, a level of resistance here. I'll show you when I take my drawing tool, what I was talking about earlier. This is my drawing tool that I've set up. And so when I draw, for instance, a level of support and resistance, you can see these other lines automatically draw with it. And so if I go ahead and draw this the way I did, I've already got, and I recommend you guys do the same with your drawing tools. Go ahead and configure one that draws a center zone, draws your level of support and resistance, but then also draws these lines about 40% out. You can see I've got one at about 25% and then one again at 40% on both ends. Automatically draw those lines so you don't have to calculate those thresholds. Use these thresholds to make trading decisions.
All right, Carol, this might be a nice little long-term play if the demand for natural gas continues to increase, which I think it will, just because we as humans love our natural gas. And
I mean, it's the cleanest of the fossil fuels. So
there you go. All right. Thank you for that, Carol. Moving on to our next name. This is Pam from Gaithersburg, Maryland, interested in gas, ticker symbol GES. Is this the retail apparel company?
It is. That's Guess Jeans and all of that good stuff. Let's take a look. Let's go back a little bit further. Let's go back, say, 6 months. This is an interesting one. What I'm seeing is some consolidation. So when I say consolidation, what I'm talking about is our level of resistance has been slowly descending, and our level of support has been slowly ascending, right? Do you guys see that? And it looks like we're starting to converge right here around this $23 range. I'm wondering, and I haven't looked at Guess in a while, but Pam, you may want to look at the headlines. Is something coming up? Is Guess, excuse me, live TV, is Guess perhaps looking at acquiring some companies, or are there people looking to acquire Guess, or are they thinking about going private, or are they going to be changing some of their branding? I think the Guess has a lot more brands to it than just the Guess Jeans brand. Something's happening there that's causing investors to kind of narrow around this $23 mark. And I would do that research to find out what it is. Options trading, because we have this whole tool chest of like 27 different strategies, it breaks it down into two different components. Number one is to understand exactly what's happening with the pattern, right? I call that pattern recognition. I often tell my program participants, I encourage them that they want to be pattern recognition specialists first and foremost, because once you've figured out the pattern, it's so easy to go into your tool chest and pick one of the option strategies that will profit from that pattern. And when I'm talking about pattern, I'm not just talking about the price and volume pattern on a price and volume chart. I'm talking about volatility patterns. I'm talking about patterns in the news. I'm talking about just patterns in general. So you want to start, perking up your ears whenever you can detect some sort of pattern, some sort of something that's going to be repeating in history, because there's an option strategy to profit from that. So pattern recognition specialist first and foremost, and then pattern utilization expert, being able to take an option tool and profit from them. That's a little bit different than, say, trading stocks and commodities where, there's only one pattern you can profit on. So it's a sifting. You have to go through all these different candidates and look for a certain pattern to appear and then trade it right then and there. It becomes more about timing. With option trading, it's more about, really pinpointing that pattern well, being able to describe that pattern well, and then you've got 27 different ways to trade it. It's just about matching what's the best tool to use in this situation. That's why I like options trading so much. It turns even the most boring patterns into profits, right? So guess there's something going on. I would try to research that. It looks like we've got consolidation, which means you want to start thinking about things like calendar spreads. Those are another name for horizontal spreads, or even things like straddles and strangles. So that's where I would be heading for this, but I would want to get a little bit more defined on what the heck is going on before I try to pick an option strategy to trade it. But that's neat, and it's at a great price. And if I remember correctly from trading Guess in the past, Pam, it's got great liquidity, meaning, you're not going to have any problems with the options. Yeah, I'm looking at the options. The options have a lot of people trading them. Interestingly enough, the bid-ask spread's a little higher than I would have expected, but that was on the March option. Let me look at the February option. There's a little bit higher bid-ask spread than I expected, but there's a lot of open interest. I think that this would be a great one. You just got to get clear on what's actually happening with Guess. I think there's something cooking, and I think if you examine the headlines, you'll figure it out.
Yeah, there's definitely some major consolidation happening. So thank you for that, Pam. Moving on to our third name. This is Sam in Portland, Oregon, interested in Brinker, ticker symbol EAT.
Yeah. But this rings a bell. This isn't one that has been on my radar, but maybe while I'm looking at the chart, Sip, do you want to look to see what Brinker's all about?
I feel like they have a killer ticker symbol name, and you would assume that it's a food company.
Yeah, I would assume that it's like a holding company for a bunch of fast food brands or something.
Chili's. Okay, they own all the restaurants.
Chili's. Is Chili's in the same family as like Macaroni Grill?
Chili's, Maggiano's. It's just wings.
Oh, neat. Well, there you go. That's Brinker. Look at that. That's an interesting. So they make money. I love that. They also they're not giving us a dividend, are they? That's okay. They don't have to give us a dividend. Let me go back about 2 years. Yeah, they're constantly making money. And look, they've been in this same zone between about $25 and about $40, maybe a little bit more, $45 for the last 2 years. It's not the most reliable choppy pattern, meaning it's not as consistent, but it has stuck in that zone. And so, you know what? This is one that I think I would just trade the signals as they come. Let me zoom back into a 6-month chart. It looks like we're, playing around with an all-time high for Brinker, at least a 2-year high. I almost wonder if now is the time to be thinking about taking a short position against Brinker. And we can do that 2 different ways. We can either short the stock outright. That means we borrow shares of stock from our broker and then sell it at a high, hoping to buy it back at a low and, fulfill our requirement with our broker, return those shares that we borrowed. So that would be shorting. You could short the stock, or a alternative way to do that is to buy a put option, right? And we want to buy a very specific put option. We want to go deep in the money and far out in time. So let's look at Brinker's option chain. You can see I'm going way far out in time. In fact, I'm back on my leaps again out in 2025, third Friday of January. And it looks like I'm probably targeting like the $25 strike price, maybe even the $20 strike price, something like that. $25 strike price. The bid-ask spread isn't so, probably get that for somewhere around $21 a share instead of spending $44 a share. And that's a debit, right? When you buy a put, goes opposite the stock price. So if you buy a put and the stock goes down, your put appreciates. That's kind of like shorting, but shorting requires you to have a margin account, and you have to do all this stuff behind the scenes where you borrow your broker stock, sell it at a high, buy it back at a low, and you make money that way. Or you could take the easy route, the cash route, and buy this January 2025 $25 put. Not only do you get a little bit of a discount, you're incorporating a little bit of leverage, not too much, but a little bit of leverage, but now you're using a cash trade. So I almost feel like that's what we're up to. I'm actually seeing that I'm getting a sell signal or a short signal that's appearing. It'll appear on my follow-through list for this evening. So after I put my toddler to sleep, I'll be checking in. And if I got that magenta arrow, if that's magenta arrow is still there when I check it tonight, then come Monday, I might be looking for an opportunity to short this, right? Now I'll be looking for the follow-through that I look for during the trading day to short this. And when I say short, it means either shorting the stock outright or buying that substitute put option. And then you're set, right? You let that thing, and somebody said, hey, you were talking about puts, but you were looking at the call side. You're absolutely right. When I want to go deep in the money on the put side, I want to go higher in price. So we're probably talking about the $55 put option. Sorry about that. You're absolutely right. And that thing's even cheaper, right? That thing is about $12.25. So thank you for pointing that out. So yeah, deep in the money put option or shorting it. And that sets us up for making money as this thing kind of goes back down in its channel. And I would say if it dips down below about $34, I would just let it continue until it finds a bottom, and I would turn that into just a simple, trend reversal directional trade. However, if higher than $34, maybe around the $36 to $38 zone, it decides to reverse and go back up, this is where we go ahead and sell the near term at the money put option and buy a protective call. So I'd buy a call that's about 6 months out, and I'd probably use $45, $46 strike price. So you want to pick a strike price that this call will kick in on if you start to get outside of the zone. We call it the channel zone, outside of the zone, outside of your break-even mark. So you've got so many options here. I would just make sure that this top signal is materializing before I short the symbol or buy that deep in the money, far out in time put option.
That is Brinker, owner of one of the chains, Chili's. Every time I hear Chili's, their jingle comes to mind. Chili's. Baby back ribs, right?
Baby back. I have a soft spot. I haven't been in a Chili's, gosh, probably 5 years, but man, I have a soft spot for Chili's. I love their burgers.
Well, granted our analysis, they are crushing it these days. Everybody's loving Chili's these days. All right, thank you for that, Sam. I did come up across an interesting little tidbit of news that I thought would be worth sharing. On this date in 1971, the NASDAQ exchange began operations as the world's first electronic stock market. So happy birthday to the NASDAQ. We are very appreciative of your invention and providing us with the ability to invest, make transactions online. Thank you, NASDAQ. All right.
They laid the groundwork, didn't they?
In 1971, before my time. And I mean,
and it's because the NASDAQ has been offering options that we're seeing a lot of the increments between strike prices, get smaller, and we're seeing options trading every penny versus every nickel. So the NASDAQ has always been, with regards to exchanges, has been cutting edge.
Without a doubt. All right. That's going to bring us to the end of our show. If you've enjoyed the stream, the broadcast, hit that like, hit that follow, hit that subscribe button. Episode 119. So we've been pretty consistent with bringing you guys quality options, knowledge, education. Also want to give everyone a chance to check out AJ's one-on-one trading program. So if you want a little bit more hand-holding, you want a little bit more guidance, AJ has a wonderful program for that. Let me go ahead and throw the link to that in the chat. And let's go ahead and any final words heading into Valentine's Day week next week. AJ, anything we should be keeping an eye on, or we're just waiting for something to burst one way or another?
Dude, I hate to say this, but I totally got distracted by one of the comments that came in just now from Tony. He invited me up. He's going to take me flying in his Cessna 172, and I'm literally on my screen right now looking at which where we are. We're talking about in Westminster, and so Tony, don't even tease me. I will look you up and I will come and play with you. You're speaking my language here. You totally got me to perk up. So that's where my mind is right now, Sip. But as far as next week, we're going to get some more economic news. And I'm telling you guys, the markets, I haven't seen a consolidation like this and seen it play out the way that it is. I'm expecting something to happen if it's not next week, the following week. I hope next week we're talking about it on Friday. But, this pattern is a very unique pattern that I've only seen a couple times, and I'm expecting something to happen next week. So I'm going to be poised, and I'm going to make sure all of my positions that I'm long on have some sort of protective put in place, or I'm going to proactively liquidate them and take what profits I have right now, because it looks like something's about to hit the fan. Just from a technical analysis, that's what I'm looking for. Maybe on Valentine's Day, when we're all kissing our significant others, something's going to be stirring in the market. But I'm going to be watching, Sib.
One last question. 49ers or Chiefs, who are you rooting for?
I mean, I've always been a 49ers fan, but man, the Swifties. I got to factor in the Swifties on the Chiefs. The Swifties, they're going to – I always think that the crowd's energy, even if the crowd is now going to be coming over some sort of like X or some sort of social platform, the crowd always gives those athletes that extra added push of, it helps reinforce the reason why they need to win. So I don't know if I can go against the Swifties.
I feel like we're going to have some good commercials this year too. I feel like the last couple of Super Bowls have been lackluster, but I'm excited about this one for sure.
Yeah, the whole commercial thing, it used to be such a big thing, waiting. And I know Budweiser has been outside of the they don't play like they used to, but man, everybody would look forward to the latest Budweiser commercial. So yeah, I'm curious as well. That's always a fun thing. And same with who's the halftime show?
Usher.
Oh my God. I didn't even know that guy was still alive.
Oh, he's like a Vegas residency, but maybe next week, if I could find a couple that I like, maybe we could play them on the show, a couple commercials.
Yeah.
Otherwise, yeah, enjoy the weekend, enjoy Super Bowl weekend, enjoy Valentine's Day. Thank you once again, everybody, for tuning in. Appreciate you as always. If you have any questions, leave a comment, send us a DM. Someone will get back to you as soon as they can. Otherwise, we'll catch you guys next week. Thank you, everybody.
Bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content.